Well, President Donald Trump has signed his plan for reciprocal tariffs. Here with more, Yahoo Finance's Ben Werschel. Hi, Ben.
Hey guys, yeah. So I like memos to study for what it's worth. I think memos to study are doing that. But as you pointed out at the top of the show, this is kind of a plan to make a plan from Trump. We do have one concrete date here from Howard Lutnick, who has appeared with President Trump this afternoon in the Oval Office. He outlined how on the studies to look at this will be completed by April 1st. And then as he put it, quote, we'll hand the president the opportunity to start implementing these on April 2nd. So what this lays out is kind of a further series of deadlines now on tariffs coming up. We have steel and aluminum tariffs that aren't going to be implemented until March 14th if President Trump goes through on that. We have the duties on Canada and Mexico due the start of March, and then this in April. So it's kind of setting up a series of sequences, but as you noted right at the top, are not going into place yet, other than these 10% duties on tariffs. On these duties announced today, what it does set up is a kind of series of countries trying to get out of it. The very first one we're going to see is India, literally within hours. Narendra Modi will be at the White House at 4 p.m. In less than an hour now to meet with President Trump, do a series of meetings, and then have dinner with him, as well as a press conference. So, and tariffs are obviously going to be top of mind there. India is one of the kind of the biggest targets for reciprocal tariffs, you would think, because they have very high duties compared to us. Others like Brazil and South Korea will also, I'm sure, be lobbying for this, for exceptions on certain things. But the question, Trump tried to downplay exceptions in his comments now, but it's clear that we have a couple months now of negotiations to see who these actually apply to in a couple months.
So Ben, just to make sure I am following the timeline correctly, my friend, the 10% tariffs on China, those are new and in place.
Yes,
but
exactly.
Everything else, we have dates on the calendar to watch for. Everything else that's actually in place right now are the tariffs that Biden kept from Trump 1.0?
Correct. Yeah. So Trump implemented a whole series of tariffs. Biden kept them in place. He added a few specific ones on things like semiconductors, which are all still in place for the most part. And then Trump has promised a whole bunch of these, and they're kind of signed executive orders or actions. They aren't actually levying duties yet, other than these China ones you mentioned. China ones are happening. If duty comes in from China, if good comes in from China, it's charged as 10%. But all the other ones are sort of plans that Trump obviously could reverse, and he's using them as a negotiating tactic. So we'll see exactly, if I talk to you again in 2 months, how much is in place, how much isn't, which was very much to be seen.
Ben, great to see you. Thanks for helping us kick off the show. Well, for more on the latest Trump tariff news, let's welcome in Ben Emons, FedWatch Advisor, Chief Investment Officer and Founder, as well as Philip Luck, CSIS, Director of Economics Program and Scholl Chair in International Business. Gentlemen, welcome to you both. Ben, I will start with you. Let's start with those tariffs, Ben. So a plan to impose these reciprocal tariffs on friend and foe could be big, Ben. Could involve numerous trading partners, but the key here, we're delaying implementation because now negotiations start, apparently. Your response and reaction to those headlines, Ben, as a market strategist?
Yeah, sure. No, this is obviously a tariff guidance that we're getting. It's like forward guidance from the Fed, right? It's sort of, we're going to implement these tariffs in the next number of months, and all these conditions, well, some of the conditions outlined, they're going to be large, but nonetheless, it's a few months from now. So you're guiding the markets. And I think this is why the stock market rallied on this, because you're not doing it right off the bat here, unlike these universal tariffs that went into effect on Monday on China, which now will start to account for CPI reports as of next month. Right? We'll see an effect from that coming in. So I think the big reciprocal tariffs are just accepted by markets like, this is going to take some while before you actually can negotiate what the exact tariff will be, because you want to level the playing field here. I think that's really what Trump is ultimately after, which means that these tariffs may not be as high or maybe as low. Either way, it's just not give you the reason to be risk off, rather to be more risk on.
Philip, I'm gonna get you to weigh in here on this whole concept of leveling the playing field, which is definitely how Trump has branded it. Is that what these reciprocal tariffs would achieve?
No, not really. I think it's an incorrect assertion that the level field is not the playing field is not level. Our current multinational tariff rates, as well as our bilateral tariff rates for free trade agreements, have been long negotiated over the last 70 or more years. we've gotten a lot of concessions for the tariff rates we have. I mean, to the degree to which the administration is worried about sort of our overall trade deficit, the fact that we import more than we export, this has far more to do with the fiscal account being, the financial account being the opposite of the current account. We borrow more than we save. We borrow more than we make. The federal government has a lot to do with that, and that's why we have the trade imbalance we do.
Ben, back to you. I'm curious, Ben, how concerned you are about inflation after the prints we got this week, Ben. We got CPI, we got PPI, we got this constant drumbeat of proposed tariffs. How are you thinking about that, Ben?
Well, there's certainly inflation risk, and we saw it playing out yesterday in the markets, as in how the markets responded to a hotter CPI, because as much as you have statistical issues there, it does show that the trend is up quite a bit, particularly on headline. We went from 0.2 up, ratcheting up to 0.5. So it looks like an acceleration. And, people are, again, to the guidance of tariffs, are probably trying to extrapolate what does this mean for next CPI reports. So yes, the China universal tariffs, which is not insignificant, it's like over 300 billion in goods, are going to start impacting the CPI data in particular. And, inflation break-evens from tips, they trade off CPI. Treasury yields trade therefore off CPI. So there's definitely an effect there. I think we should be concerned that the acceleration is happening. What we saw today with PPI, maybe somewhat statistical too. The PCE data can be influenced by PPI. I would not expect that to be lasting though. So I think tariffs are here. They're going to start increasing prices, and it's going to already start increasing inflation expectations. So we would see some follow-through on the actual inflation in the next few months.
Philip, what about you? What are you watching on the inflation front to see? Again, considering, as we've been talking about, that most of the tariffs are not actually in place yet, but do they still have that inflationary impact in anticipation of them?
They certainly can. And to your point about most of these not being in place, I'm starting to feel like Lucy with the football a bit, or every single day I feel like tariffs are going to come in and they don't. They absolutely can. I mean, firms are going to delay investments as a result of these tariffs. Firms are going to pass on price increases that they're expecting. Firms are going to change behavior, and that can raise prices even without the tariffs coming in by itself. I mean, a great example of this was when we put tariffs on washing machines in the first Trump administration, the price of dryers went up, even though the washing machine, the dryer didn't have a tariff on them. So you can have tariff effects even if you don't have, price effects even if you don't have tariffs on them. But I would say, I mean, the broader challenge here is going to be if we do have tariffs on, say, steel and aluminum that are universal, steel and aluminum prices are going to go up between 8 and 5%. That's going to have huge knock-on effects to industrial production further down the chain. So if these tariffs go on in a broad sense, we're going to see big increases in price.
Ben, bring you back in here. All this talk of tariffs, the proposed tariffs, Ben, that you keep hearing about, as a strategist, does it make you reconsider how you want to be positioned in the market?
Yeah, for sure, because what tariffs tend to do is create divergence between assets. You can already tell from the performance of European stocks to US stocks this year in itself. The tariff has, I guess, really driven the euro lower to the dollar, but it has benefited the European stock market as one reason. So I do think you want to play these tariffs with that sort of idea. Look for the opportunities where you get a bigger divergence between the US on the one hand and the other markets outperforming potentially. So diversification internationally, I think, is an important aspect this year for strategy, as opposed to previous trade war where it was very ad hoc and people took a negative for the global economy. I think people look back now to the US, like how will this really impact the US economy? Potentially a lot of uncertainty. I think therefore you get some outperformance in other markets, and that's your diversification opportunity.
And Philip, it's interesting what Ben is talking about in terms of U.S. competitiveness, its footing, indecisiveness. But I would imagine that other economies with which we have relationships will also see similar decisiveness issues. Like if I'm a business in the EU and I'm trying to decide on a spending decision, and I'm an exporter to the U.S., it's going to be a tough time to make that decision. So how could this be viewed in terms of the global economic picture?
Yeah, absolutely. This is uncertainty that it's going to affect everyone. We're the largest economy in the world, and what we do impacts others. In addition to sort of how this might affect European firms making investments in Europe, one thing that I also note here is that the administration is clearly trying to use tariffs for two different purposes, either sort of industrial policy to rebalance trade relationships, also as leverage to get things that are sometimes not related to trade. The point I would make is those two goals are very difficult to achieve at the same time. They're somewhat diametrically opposed. If you use tariffs for leverage, you need to have dexterity. You need to be able to put them on, take them off, increase them, decrease them as your partners respond. That's exactly the opposite of what you need to create a stable investment environment for firms to make investments here, moving their production to the United States, or abroad to support and to sell into the US market. So these tools really can't be used together in a very effective way.
Ben, final question. I can't let you get out of here without a question on the Fed, Ben. It does seem like the Fed is on hold for the foreseeable future. I wonder, Ben, what you think that means for the market.
Yeah, that means that there's a possibility they could reverse course, meaning they're going to move from neutral to tightening. If we're going to get in an environment where inflation picks up more, in part affected by tariffs, either people front-load purchases and drive up growth and drive up prices, and or companies passing them through. I think that is one risk here building, because as much as we think they're going to be able to continue to cut rates, I think Powell was somewhat clear about these tariffs yesterday. Regardless of tariffs, inflation goes up, got to use our tools. So we have to keep in mind that the Fed may be moving towards a different position this year if the tariffs are continuing to affect inflation.
Gentlemen, thank you very much. Ben and Philip, appreciate your perspective here.